My name's Patrick Sargent. I'm a registered tax agent and chartered accountant, and I'm the director of Lawpath Tax and Advisory. No one likes paying tax, so here's how you can pay less tax in Australia legally. The starting point is your business structure. Your business structure offers a lot of ability to reduce your overall tax for your business. Whether you operate as a company and you cap the tax at the company tax rate, or you hold your shares in a family trust and we income split, the structure is a starting point to reducing your taxes, and having the right structure gives you the ability to reduce your overall tax on your business's profits. A family trust is a great way to reduce your tax in Australia. If you hold your shares in your trading company via a family trust, it gives us the ability each year to do tax minimisation and income split the profits to family members and potentially a bucket company. What it allows us to do is get the cash out of your company without paying top marginal tax rates. So a family trust is a really great tool for tax minimisation and a really great tool to get cash out of your business without paying top marginal tax rates. And accounting software is critical for tax minimisation. Let me explain why. All your transactions should be coming into your accounting software via bank feeds. This means we don't miss anything. We pick up all the transactions and expenses that your business has, and it gives us the ability to categorize every transaction so we don't miss anything. When reporting your business expenses, there's a few key things to consider to increase your tax deductions. One thing might be having a logbook for your motor vehicle, which allows us to write off the full cost of the motor vehicle over a period of time and claim all the running costs, including registration, insurance, interest on the loan if you've got a loan to the motor vehicle, fuel, repairs and maintenance. So having a logbook is a great way to increase your motor vehicle deduction. Consumables is a really interesting one. If you get coffees, you might want to consume them in the office so they're tax deductible. So doing some planning around where you spend your money on consumables is really critical, and where you consume these things. A travel diary is great if you're traveling to get some business deductions. If you're traveling for work, if you're going for more than 7 days, make sure you keep a log of it. It's good to keep a log of it anyway, so you can track what you're doing and your activities, and if you get audited, you've got that supporting documentation. And working from home is a really good deduction as well. You might claim a percentage of your rent if you've got a home office set up. There's some really great working from home deductions available. Superannuation is a really good deduction as well, and it's great for tax minimisation. When we do tax planning each financial year around April, May, we always look at superannuation as a way to save money on tax. So your super's taxed at 15% going into the fund, but then you get the tax deduction outside of the fund at marginal tax rates or the company tax rate. You're around 10 to 20% better off by putting money in your super. It's a bit of a risk-free return on doing that. So we always recommend looking at topping up your super up to the cap if it fits within your cash flow. So there you have it. There's some key tips on reducing your taxes in Australia legally. Here at Lawpath, you can get a tax deductible plan where we give you advice on how to reduce your taxes in Australia legally. Reach out if you need a hand.